Welcome back. This is the Alchemist Nation podcast. My name is Walter Amarello. I get the pleasure of traveling all across the country and speaking to some of the best real estate investors who are just looking to give back. Today, we've got one really cool guest. I'm hanging out with Mitch Jorsky, the Scaredy Cat Guide. But today is Jake and Gino. We got Gino on the line. Gino, welcome to the show.
Dude, that is bringing a lot of energy, man. How you doing? Happy
Very good.
pre-New Year, right?
Happy New Year. Yes, we're ringing in the new year with probably one of the best multifamily investors in the country. We actually had Rod Khleif on last week, and you're at that same level where you guys have just really taken on multifamily as a niche and mentoring with people who are just looking to create passive income for themselves, getting out of the rat race and moving forward. You've come a long way, and you were just talking about your camera was from Brandon Turner. You're hanging with some of the coolest people in the country.
Well, that's what happens when you start a podcast, right? You're always thinking about monetizing, and just like everything else in life, there's so many ancillary benefits to everything you do, right? Multifamily, you get into it for cash flow, right? But there's so many different benefits, and you don't know what you don't know when you start out, and just start. Once you start, it's like cash flow, appreciation, tax benefits, principal pay down, cycle of resiliency, hedge against inflation, economies of scale, becoming a multifamily entrepreneur. It goes on and on, right? Because when you first start out, I just wanted to buy and hold forever. That was my mantra when I first started. And I didn't start out like Rod or like a lot of the other investors. Jake and I were just too dumb enough. We were buying stuff by ourselves. We didn't have syndication as a model, as a tool, right? We used owner financing. We started out with a little bit of capital. And from there, we bought our first deal, did really well, refinanced it, bought the next one. And, a few years later, we've got 1,000 units. We've been able to refi $11 million out of our portfolio. And then we started syndication. So for everybody out there, don't look at this multifamily as this pie in the sky thing, because we all need to start somewhere. And multifamily to me is a team sport. That's what I love about it. If you're great at one thing, whether you're great at underwriting or great at raising capital or great at maybe creating the business, putting in business systems or running day to day, whatever that looks like, that's what multifamily is. And don't get into real estate just to get into real estate for landlording. Get into it to actually create a business. That's the mistake that Jake and I made when we first started out. We're like, hey, this real estate thing is pretty cool. I'm gonna get some cash flow every month. But we weren't looking, I guess how people say, the forest through the trees. We were lost. We were just focusing on that one deal, trying to get $100 profit per unit. That's what everyone's focused on. But there's so much more to real estate than that. There's the lifestyle aspect to it. And there's really, the ability to create life on your own terms.
I love it. So, Gino, you touch on a lot of the pieces that I started the same reasons, got into it. We're definitely not at 1,000 units. I started with a business. I started by myself. I felt like I could do it all by myself. I wanted to have 40 units and be the landlord. I just wanted to manage my own units. And obviously that's changed dramatically over the years. How did you come to that point where you guys shifted? I mean, syndication is a whole different element. 1,000 units is what I'll hear, 20-year-olds say, yeah, I'm going to go, 10X, get 1,000 units. But it seems like pie in the sky sometimes when you're first starting, especially if you're in your 30s or in your 40s or in your 50s and you're saying, how do I get in? What would you say made that shift for you?
So, Walter, there's nothing wrong with wanting 40 units. I think people don't poo-poo anybody what they want, right? I think people don't lack motivation. They lack clarity, right? If you want 40 units, go for the 40 units. That's a great strategy for you. For Jake and I, in the beginning, we didn't want shiny object syndrome. We did not want crypto. I didn't want single family homes because I had a restaurant. I was working 60 hours a week. So I knew what I wanted. I just wanted multifamily, and I wanted to get a couple hundred units like everybody else, wanted to quit my job. Like I said before, you don't know what you don't know when you start out. Just start out, because I think Jay Scott, he said on one of my podcasts years ago, not many people in multifamily that have one deal. You either have 0 deals or you have a lot of deals. So the momentum is when you start out. And, people focus just on the money, that money aspect. I don't have money to get into it. I don't have money to get into it. Neither did I. But guess what? We're in 2020, going into 2021 right now. Owner financing, master lease options. 2 key words. Learn those 2 strategies, because we're going to have a lot of mom and pops who can't finance deals. Debt is getting harder to come by, and it's going to coming up. So when you start out, just become clear. And, there's inflection points I think we all have in our lives. I wrote a blog article on this. It was like really seven ways to really start a multifamily business. And the first one was the aha moment. We all have that aha moment where it's, holy crap, I got to do something different. And for me, back in '08, it was the pandemic. I call the Great Recession my pandemic. A lot of people back then were just getting hammered because it was just a massive run up. And my aha moment was I'm working a lot more. Grubhub is killing me. DoorDash is of the world back then, a lot of competition. So the epiphany was I need to do something. The second thing was take massive education. I needed to get educated. I knew a little bit, but as soon as I got my mentor and I started doing the coaching and I started really focusing on multifamily because I had done mobile home parks, it didn't work out. I had done a strip mall, it didn't work out. I'm like, I need to do something where I can start passively because Jake and I both had full-time jobs and be able to manage it, but not do it full time, and then gradually work my way into it full time. So that second one was really take massive education, and the third one is just take that massive action. Education times action equals results. That's what we say, Jake and Gino. I was taking massive action early on. I didn't have the education. I wasn't doing well. I started taking that massive education, then coupling with that action equals results. The next step was I got that first deal. That first deal came by with Jake, and it took us 18 months. I'm not going to lie to you. Biggest mistake we made, two things. We got into it thinking that we were the ones that were out there making the brokers' lives great. Where in fact, the brokers are the gatekeepers. They're the ones who have the deals. We all make those mistakes when we're early on and we're beginning, right? So Jake is sales guy. He's a bull in a china shop going in there posturing up against him, and that's why it took us a long time. We heard a lot of y'all ain't doing business down here until we had the break where we found a great broker. The first deal was owner finance. We got a 10% owner finance on it. The next, I think, inflection point is you get those next couple of deals and the momentum comes, your credibility comes, you start learning how to put deals together. I unfortunately didn't have the Jake and Gino community. I mean, I created it because I saw that the community really helps a lot of students out, and it's not just education videos and it's not just a deal analyzer. Most of it, really, believe it or not, guys, comes from the networking you get and the accountability. When you have somebody holding you accountable and you're spending, I say spending, or I would actually say investing really, but when you're spending on your education, guess what? You're going to do the work. You're going to get on the call with your coach and you're going to progress. You're going to underwrite those 5 deals and you're going to call those 2 brokers and you're going to go on that property tour because you invested in yourself. It's not like, you know what, I'm going to do it when I do it. That's why people don't progress, right? After you do a couple of deals, then all of a sudden in multifamily, you're at 60, 70 units and you're like, holy crap, I've got a lot of stuff going on. I can't do this. You got to do your first hire. That first hire for any entrepreneur is probably one of the most challenging things because that journey so far is I'm gonna do this, I'm gonna do that. It's the I'm a mentality. And that's what we're taught to do, right? But you need to shed that. And that's the hardest thing. That's why for 20 years, I had one restaurant for 20 years. How is it in 6 or 7 years that I have 1,500 multifamily units? I was able to grow, but I was able to grow because I continued to invest in my education. I got scaling up coaches, I got traction coaches, because if you've never done something before, you need to learn how to implement those systems. So don't worry about this when you're first starting out. Don't get overwhelmed by what I'm talking about. That's just a natural progression. That's why you want to get into multifamily, because it'll allow you to be able to scale up and to be able to hire people to help you out. And then you see ultimately what your highest and best use is, right? Jake is doing the property management day to day. He loves that. I'm doing the education day to day. And there's such a nice synergy between both of them because we get vendors through there. We get leads through there. We have students that are bringing us deals. We're able to do mortgages through that. So it's just a great synergy that we've been able to create. But on the front end, there's a lot of work. There's a lot of, you want to say risk taking, obviously, but really a lot of foresight and a lot of thinking long term. Whereas nowadays, my fear, this generation is more short term, more transactional because, you go to Instagram, you get the likes. There's a lot of hard work. Anybody who's successful out there, I'm going to tell you got to give people props who are really successful, whether you like them or you hate them. There's no such thing as an overnight sensation, overnight success. That does not happen. You're going to see, and you look at sports. I mean, I'm a big Jeter fan, right? I mean, the guy worked his butt off all the time. He wasn't even married until he retired. That's how focused he was. He actually, and there's a lot of, there's a lot of sacrifice, right? He sacrificed a lot to be one of the best in the world. That was his focus. That was his clarity. That was his mission. I want everyone to think about what their mission is, why multifamily for them or why real estate for them. I think it's an amazing vehicle. I think it's a lifestyle. I think it's a way to build generational wealth, and it's a way to take care of your family.
Jake, Gino, I love it. Look, what you guys have created between you and Jake, it's powerful because it's a synergy of 2 different sides, right? You almost on the front end of sales, and then him on the back end, just making sure that everything's kind of being managed. Would you say it's a natural progression of your personalities? Like you just went towards, hey, I'll handle the front end, customer service, maybe acquisitions. And if you can just handle this maintenance side, how did you guys come to that conclusion and say, I'm good at this, you're good at that?
Well, in the beginning, we both were doing everything, right? That first deal, he was boots on the ground. So I was in New York and he had moved to Knoxville, Tennessee. So I was looking in New York. I couldn't find any deals there. So he moves down to Knoxville. He doesn't really know anything about the business, but I'm teaching him how to underwrite. I'm teaching him how to look for deals. We're analyzing deals. When we took that first deal down, he would actually send up all the bookkeeping up to New York. I'd do all the bookkeeping and he'd run the property. He'd property manage. He liked the property management aspect of it. He liked it was like a light switch went off on him. He was not an entrepreneur at all. He was your basic W-2 employee. But when all of a sudden renters started paying him and he started getting that cash, I think the light switch went off. He's like, wow, people are actually paying me. And in direct proportion to how much value I bring, the more residents I have, the more money I make. You have 2 single family homes, you're going to get 2 rents. You have a 30 unit, you're going to get 30 rents. T. Harv Eker talks about it. Exactly. The more people you serve. And that's hard, right? Because people are like, well, I'm comfortable with my single families. Guys, I guarantee you, the more people you serve, the more units you have, the more money you're going to make. That's the bottom line. I can only sell 100 pizzas on a Friday night. That's all I could sell on a Friday night. If I could sell 1,000, I'd make more money. I just couldn't have that output. A lot of us have a great product. We can't fulfill in that product. And I think multifamily allows you to fulfill in that product. So for us, when we started out, we did everything. And then, naturally, by our third deal, we have about 200 units. Coincidentally, it's only 12 months after we started buying deals. He's like, you know what? I'm going to leave my job. I'm going to do property management full time. And I said, Jay, great. I'm still at the restaurant. We're still buying. We're still acquiring. I'll help you at the property management side, start building out systems. And then when I decided to start leaving the restaurant, I'm like, you know what? I like Jake and Gino. I'll take over the education side. We wrote a book and we started education more for the credibility piece, right? Because when you talk to brokers and you have a book and you have a credibility book, and you have, yeah, exactly, right? I mean, it's great. It's great. You know what I'm saying? So we all throw it up and you start doing that and it gives you confidence, right? And then all of a sudden, by the way, hey, Mr. Broker, do you want to come on the podcast with me? You start a podcast, right? And you start media and then you start education and YouTube videos, and that helps the brand, right? And it also helps with lead flow. It helps with so many different things. You start the education, and then couple of years after the education, we're like, we have 1,000 people. At the time, it was about 600 people on our investor database because we had done a couple of live events, but we're not calling them. We're not nurturing them. So like, we have all these investors. Let's start syndicating. So there's another leg that we had started. We hired on somebody on. We brought a partner on to help us with that, because when you have 600 investor calls, you have to nurture them. And that's another business in and of itself. But the pie is not finite. The pie is infinite. If you're willing to share the pie, they all help each other. If you're getting educated by us and you want to invest with us, great. If you not want the education part, you can still invest with us. So the synergy is just an amazing component that if you're thinking long-term, anybody in any business can do it. If you're a single family home operator, the model is the same. You're doing single family homes. Why don't you hold a couple and, rent a couple out, start a little rental portfolio? Why don't you have a property management company? You can start an education company. You can fix and flip some. You can do hard money loans. You can start raising capital. What about the insurance broker down the street who's doing home, you're buying homes and selling homes? You know what I'm saying? It's the same model. It's just that we all get caught in the weeds and we're all thinking scarcity. I can't share my commissions. I'll give you a quick story that really bothers me. I had a chiropractor slash kinesiologist in New York years and years ago. I would go to him and I'm like, I can't get a good massage here. Why don't you get somebody in your office to do massages? And you know what he said to me? He's like, if I get that person, they're going to take my clients from me because you're going to come to me less. And that's the mindset for most entrepreneurs, right? Instead, I was thinking to myself, hey, you get a massage person in here. You have your place. She has or he has their place. You have a little coffee shop in there. And then you have more customers coming in. You have more people coming in. You're going to share resources, but that's not how most people think. And I think multifamily and real estate really lends itself to being able to share these resources and to be able to grow the pie.
I love that, Gino. That you hit on so many elements to creation as opposed to competition. You talked about T. Harv Eker, where in Secrets of the Millionaire Mind, he says you could be an investor for one family or 10, or how big do you want to be? How many families do you want to help? Maybe 100 units. And you've obviously 10x that and gone to the next level of 1,000 units. And it's all about adding value. And it brings me to Alchemist Nation, right? We're on a mission to build 100 millionaires. And for
That's
the same
awesome, dude.
reason that you're doing what you're doing. It's just it's a goal to set to add more value. How do you get to the next level? And
Hmm.
we found out with our coaches. We said, hey, you know what? I'm going to bring in a bunch of coaches, all specialties. You know, Mitch here is a master of running calculators. He'll teach you how to do it. And we have mindset coaches, people who will teach you how to be an influencer. There's all sorts of different pieces. And early on, I said, there's no way I can help everybody. There's no way I can do it
Hmm.
by myself. It's impossible. And if I get a small piece of what that coach is making, awesome. If not, if they move that person forward, it at least helps move that person forward. And so
Hmm.
if anything else, it just validates that I gave somebody a good reference. And how would you suggest people who are stuck in scarcity, if they can't get into that abundance mindset naturally, what would you say is a good way to help somebody get past that scarcity mindset and move into abundance? What is a tip or a trick that you've seen work really well for people?
Well, the first thing is you have to assess your life. I would actually Google life coaching and really, you got to work on yourself more than anything else. Why do you have that mindset? I mean, I did. I had the mindset years ago. I mean, I had that one restaurant and I was surrounding myself with people that said, hey, you can't take any risks. You got to stay small. Watch your words. I read Killing Sacred Cows by Garrett Gunderson. I think back in '08 when it came out, it didn't really resonate with me as much. I read it a couple of years later. And he talks about the abundance versus scarcity mindset, about the whole way the system's set up with 401ks. We're taught to save our money until we retire. And then by the time we retire, we have a scarcity mindset. We were afraid of our money running out. So I think, yeah, I think really surrounding yourself with people who have that abundance. And, for us, it was hard in the beginning. It really was, because when you're in a W-2 job, you're focused on yourself, right? It's just all about paying the bills. And once I was able to hit that nut, it's not so much as me anymore. And when you open up and you start a business, Bob Berg, The Go Giver, read that book. That's another, we're taught give to get. And I think Bob and a lot of these high level entrepreneurs are out there to seek to serve, right? Because they don't really need anything back. But if they're out there seeking and they're serving people, it's going to come back to them 100-fold. And I think if you can really focus on trying to help other people and not getting anything in return, it's going to come back to you 100-fold. That abundance and scarcity mindset. Garrett talks about it in the book too. He talks about soul purpose. What's your soul purpose? Most of us out there don't even think about, when we're scrounging by and getting by in our W-2s. And at the restaurant, I'd work all week, get paid on Sunday, start the process over again until I really dove deep into what my why was and really focus on what I wanted out of my life. There comes a point in your life when you get really frustrated. And I did. I mean, most people do. I'm like, I'm born in the greatest country on the planet. We have all of these resources. And don't anybody kid yourselves. We live in a great, amazing country. I don't care what anybody says. We all have the ability to do that. Some may be more advantaged, in better neighborhoods, whatever that may be. But still, when I was listening to Jim Rome, when you're saying that $25,000 a year is poverty, I'm just saying, go out to the rest of the world. Some countries are making $25 a year. I'm just saying there's so many more opportunities. We all have cell phones. Our level of poverty is different than other countries' level of poverty. You have so many resources here. You have the internet, you have YouTube, so many different ways to start out with. So, I mean, find out what your sole purpose is. Find out what you want to do. I mean, most people don't know what they want to do. You can't focus on something. I was always asked, what do you want to do at the restaurant? I'm like, I don't want to be here. That's not focusing on what I don't want. It's focusing on what I don't want, right? Focus on what you do want. And once you get clear on that, I'm telling you, then you can start setting goals and then you can start using processes to hit those goals. And then all of a sudden things start happening.
That is such powerful advice for mindset. So for resources, I recognized a couple of books as you're speaking. Secret is about focusing on what you want, and you're almost hitting on the why. Like Simon Sinek wrote a book,
Yeah.
The Power of Why,
Mm-hmm.
and you're almost hitting on that. Just know why you're here, know your purpose. I did an event, actually. T Harv created the event. It was called Mission of Millions, and it was where you're supposed to go find out why you're here. What are you really supposed to do on this planet?
Mm-hmm.
And it turns out that everybody really is about helping people. Like if
Mm-hmm.
you really get down to like the deep core of a person, they are here to serve. And you
Mm-hmm.
talked about serving a lot, Gino. So wow, I keep doing it because your thing says Jake and Gino.
It's funny because my kids always ask me, why is it Jake and Gino? Why is it not Gino and Jake? I'm like, it sounds better with Jake and Gino. I don't care if I'm the second guy. I could care
Gino,
less.
who has more kids though? So like you have like a
Yeah.
whole football team behind you that can back you up on this.
I've got six, and Jake is pregnant with his third. So I keep telling him
Wow.
he's got to have a few more. I mean, the great thing about it, Walter, there are so many resources out there. I'm a big Tony Robbins fan. I started with him 15 years ago. I love Zig Ziglar too. I think listening to Zig's drawl, I mean, he's a great, great sales guy. I interviewed his son, Tom Ziglar, on the podcast a few weeks ago. I mean, talk about great stories. I think just being able to relate to those kinds. Tony Robbins talks about the six basic human needs, right? The four fundamental. What are they? There: certainty, uncertainty, significance, uniqueness. And the fifth and sixth is where you have the growth and contribution. That's where we, if you're doing the basic four, most of us can have that, right? We're certain about certain things. We're uncertain. We want to be significant. We want to be loved. But 5 and 6 is growth and contribution. Once you hit that 5 and 6 is where you're really living. And to most people, they think they need to buy the car and they think they need to buy the jet, but really growing and being challenged every day, because you see a lot of entrepreneurs out there. Jeff Bezos could cash it in tomorrow. He doesn't. It's not about the money for him. He's not chasing money anymore. Once you start chasing money, that's the detriment. Because I was chasing money at the restaurant and I was doing the same thing every week, and I was just thinking about myself. Now I'm trying to chase value. You guys are trying to chase value by creating 100 millionaires. The more millionaires you create, as Zig says, the more people you're willing to help, the more you're going to get helped, right? And that's what you're trying to do, and that's what Jake and Gino's trying to do, because you have an open ecosphere. Students are learning how to do deals. All of a sudden, they can't fund their deals, or they need a partner. Let's partner on. Or, Gino, I found this deal, it's too big for me. And it's happened before. So having that scarcity mindset, I wouldn't have been able to create that ecosphere. Having the abundance mindset, if I lose out on a deal once or twice a year, it's going to happen, right? It's whether it happens to me or another student, I don't care about that. Long term, I'm just worried about creating the system where it grows and grows. And ultimately, when you contribute to people's lives and they can say, hey, he helped me quit my job, or hey, he helped me buy my first deal. That's an amazing feeling. At least to me, it is. I love that feeling.
You're having an impact in, I think it's Eric Thomas who said, or Les Brown who said, people will know you came, right? Like people will know that you came through because of the lives you touched, the lives you changed, that you're having a massive impact. And we haven't really talked about the fact that you have 6 kids, Gino. Like, how do you manage 1,000 units, 6 kids, a massive education company? You said just when you started, you had 600 people to follow up with. Right now, I'm sure it's hundreds and hundreds because of how much value you're adding. And the other topic I want to talk about is add value. Right, every investor ever says add value, and we talk about it because we know, like, you've got to add value. You're adding tons of value, and everything you do, it's like every movement you make in your day, you're adding value at different levels. Like you've got symbiotic flows of value add, and you've structured your life so that you're super leveraged, and every movement you make has a lot of value. How does somebody start? Right? Because you have a lot of systems behind your value add proposition. How does somebody start in the beginning, and where did your children come into this? How old are your kids? When did you leave that restaurant? Did you have children already? Like, where was this
So
flow?
yeah, I think the first thing everyone has to understand is it's hard work, right? I call it the Holy Trinity, right? The Trinity. Work hard, then you work smart, and then you work with passion. But don't kid yourself. It's hard work in the beginning. No matter what you do, when you get that rocket ship off the ground, there's a lot of propulsion. Then all of a sudden, less, and less, and then you have the takeoff. I bought the restaurant back in '94. I have an amazing wife. So, I mean, like, she stays home. We homeschool the kids. So for me, she gives me the peace of mind to be able to focus on what I'm doing. So I can focus on what I'm doing. But when I was working at the restaurant, I was doing both. I was working probably 75, 80 hours a week, for I would say at least a good couple of years. My children range in age from 21 to 6. So most of the children grew up in the restaurant working. So I wanted to instill that work ethic. They loved it. I liked it. It's just that I couldn't see a future for myself. I had a job. I wasn't building a business, right? That's the one thing that I just didn't like about what I was doing. And I didn't have the skill set to understand that. I was doing the multifaceted, what we call multifaceted multifamily in the restaurant. I had a cookbook. I was doing physical products. I just didn't want to be in the space. I didn't want to work on the weekends anymore, on the holidays. That's what that business entailed. And, everyone's having fun and I'm working. So, the kids, I always make the analogy of having kids is like getting into real estate or starting a business. That first one, it's never the right time. Everyone's going to say there's no deals out there. It's never the right time. Well, you know what? If it's not the right time to buy deals, you can be working on your investors. You can be creating investor database. You can be working on your vendors. You can be working on your systems. It's not just deals, right? You know, when Jay Scott, another time, he started back in '08 flipping homes. Was that the right time to start flipping homes? No, there's tons of deals out there, but no one's buying those homes. So you have to be ready. It's never the right time to have a kid, whether it's the first one or the sixth one, right? And having kids is like the inflection point of investing in a business. The first one, no one gives you a manual. You don't know what the heck you're doing. With real estate, you can at least get coaches. The second one, it's like, okay, now I've got two. I can sort of figure it out. For me, when I had the third one, that's when the light bulb went off. I'm like, I really like this. I really love having a family. It's a lot of hard work. It's like running a business, to be honest with you, because you need to dedicate time. You need to be there, and it's all encompassing. I didn't go out and hang out with friends and drink all the time. I was with my family as they were growing. Have the fourth one. This is really cool. The fifth one, and it's the same thing with real estate. You buy your first multifamily. It's hard. It's rough. You've never done it before. The second one, you sort of have a framework. You've gone with the lenders. You've bought the deal. You've talked to the maintenance techs. The third one, this makes a little more sense. By the time you got your third and fourth one, okay, the only difference is, cash flow, multifamily kids, they're not cash flow, they're negative cash flow until they get to a certain age where they can start working and they can start, they can start actually giving back to the business. Right. So it's been a great journey for me. I've been blessed. And I think, you really need to focus and set priorities, time block. And what is your why? Everyone says it's their family, their why, but for me, it is the family. But I want them to be part of the business. I do a podcast now with my wife. We do the Multifamily Zone podcast, where we talk about spousal communication and all that stuff. So she didn't do that 2 years ago. Now she's on this journey. Also, she became a life coach as well because she sees the impact that we have on people, and she started that journey. So figure out what your why is, and as that grows, I mean, you just continue to work.
I like to say that I was told at that event that I mentioned, the Mission Millions, that your why is not your family. Your why is something bigger than that,
Mm-hmm.
because at some point your children move out, a spouse or a family member may die, and
Mm-hmm.
so you're like, you can't allow that when somebody else moves on to a different arena, that your why is gone. Now you've got to
Mm-hmm.
have something bigger and incorporate it so that your why allows you to spend more time and create and add value to your family. So I like that you discovered that, and you've been working towards it, Gino, so far.
I'm still discovering it though,
I'm
because
impressed.
I'm still discovering, because as you say that now, if I think about my why even more, what's been going on over the last year, I would have been devastated if this was 5 years ago. I was living in New York. The restaurants are all closed. They're shut in right now. I would have been a bitter, angry person. So part of my why is I want to have control of my own future, right? And I'm not talking about retiring, right? Because I'm never going to retire. I wanted the skill sets to be able to say, hey, you know what? I can pay for my kids' dental work. I can go on a vacation. I can buy $100,000 car. Not that I'm going to, but I wanted, that's what my why was: ultimate control of my own destiny and not being beholden to, corporate or to government or whatever. I don't want a pension. That's not something that I desire. That's my why. I think everyone on this call, figure out what your why is. And as you mentioned that, I never really thought of that until now, because I'm putting the pieces together. And being up in New York with the restaurant, that would have been devastating to me. I would have really, so I think deep down inside, back 10, 12 years ago, I knew that was coming subconsciously. I'm like, how do I take control? What do I do? And fortunately, multifamily is one of those areas where people need a place to live. We're in markets, Tennessee and Louisville, Kentucky, and where there's still jobs. They're not closed down. People still are paying their rent. So we've been fortunate from that aspect.
Which is a big difference from New York, which I know Mitch is from New York as well, and
Mm-hmm.
and you grew up in New York. So you're getting away from the tougher markets and getting into more opportunity zones, the Dust Bowl, the
Mm-hmm.
South, where we know people are moving. It's just less. There just seems to be more opportunity for the future because the land is less expensive,
Mm-hmm.
and the regulations are much easier on the landlord side and business side.
Mm-hmm.
So when we talk about the future, because I know this, that you think about this every day. You're a long-term investor. You're looking at the future. Obviously, you're always about the numbers. Right? You've invested through downtimes. You invested through ups and booms. So you're not a speculative investor. But if we were to speculate, where do you see the future? Because there's no way we could have seen that restaurants were going to get hit the way they did. And there's no way to really predict what's going to happen in 2021. Although, much like Jim Rohn says, the future is going to look a lot like it has in the past. So we know
Mm-hmm.
on some level it will look similar. What do you what are you preparing for? Or how are you preparing your students and letting people know this is what I see coming? I know Ken McElroy ended up putting out a really good video. He's put out a few good videos about what he sees happening in the multifamily arena. What is your take on it? And what would you say you've seen?
That's a great question. I think the first thing everyone should do, go on our podcast and listen to a podcast we do with somebody, a gentleman named Chris Porter. He wrote the book Big Shifts Ahead. Understand what's going on with demographics, right? I mean, like we're actually launching another podcast, I think in the next 2 weeks that we did with him. And it's really demographic based, right? Where are the jobs going? Where are the people going? COVID accelerated a bunch of trends. They didn't, start the trends. People were already working from home. People were already leaving the Southeast. Immigration was already slowing down. The economy was always already slowing down a little bit. This just perpetuated and accelerated it. I think the Southeast is going to be a great area to invest in going long term. We have a lot of investors from New York constantly calling to buy deals in the Southeast. As an investor, look where the flow of money is going to. Bitcoin has been crazy the last few years. Why? Because we have 0% interest rate environment. Money needs to find a yield. I think the stock market is overbought, but I've been saying that for the last 3 years. So I've been wrong on that. To me, it's the biggest Ponzi scheme on the planet. To be honest with you, I mean, that and Social Security. I mean, other than that, those are two massive Ponzi schemes, but they're still going because there's nowhere else to put money, right? That's the problem. I think multifamily structurally, I think going long term, I think it's a viable asset because people need a place to live, food, clothing, and apartments. That's the basic human needs. You can't buy it on the internet yet. You can't do that, right? Retail, people are going or shifting down. They're more experiential now, but you don't need all that space. Office, I don't know. I mean, office seems like it's going out more to suburbs. People are working from home. People are working wherever they want to. Self-storage looks like a pretty good sector, but what happens when you go into a big recession? Are people going to want to keep their self-storage? I don't know. So I like it. Industrial seems like a really good area because you're seeing all these distribution centers and all these warehouses popping up. So that may be a good niche, but that you really need to be specialized, right? Building, I love building multifamily, especially, but that is another one where you really need to know what you're doing. You need to know labor, you need to know your materials. It's a longer project, 24 to 36 months, whereas I can buy a deal tomorrow and start cash flowing day one. So there's risks involved with that also. I like multifamily going forward, but I think what everyone needs to understand is one thing hasn't changed. Running a business and having business skills hasn't changed. You can do that in any sector. Whether you're running a restaurant, whether you're doing, online training, whether you're running real estate, if you learn the principles of building a business and creating systems, that will never change.
I like that. And I assume you're the same situation as we are. In COVID, we actually made more money, right? In
Mm-hmm.
2020, we did better than we did in 2020 on 2019. And I don't think it was because of COVID. It was just because we've always set our goals to double what we did the
Mm-hmm.
previous year. So
Mm-hmm.
2020, regardless of what happened, we had to shift. I'm a live stage speaker and I went to suddenly no stages, right? All my
Uh,
leads and deals came from like live
mm-hmm.
speaking,
Yeah.
and suddenly that was taken away. So we just pivoted. What do you think stopped people from making money in 2020? Say, perfect example is a restaurant, right? That is a scenario where
Mm-hmm.
you could argue and say, hey, you know what? There's no way you can make money because the restaurant, people can't come inside the building anymore. What are, in that situation, we saw people go out and start, using Grubhub heavily and,
Mm-hmm.
starting their own online, hey, just call our service and we'll get it to you. Those delivery processes, that's all across the country. Gyms
Mm-hmm.
are now online trainers, right? So there's all sorts of tools that people are using. So for real estate investors who are sitting at home saying, oh, COVID stopped me from going on appointments or looking at properties or taking a look at deals, what advice do you have for them?
So for me, I think the answer to the first question was I think the word fear got into a lot of people. And I think what happens when you're afraid, I was afraid back in 05, 06, 07. I didn't really take that much action. And when you're afraid, you don't take action. I think the next step is anger. I think when people get angry, they start taking action. I'm not saying it's good or bad action, but I got angry in 07 and 08. I'm like, I don't want to be working harder and making less. So I went out to find solutions. Now, we talk about the stage of energy. You're working at a catabolic or negative level of energy when you're working at that victim, fear, anger. Anger will get you working, but if you continue to work on that, you're going to burn out and there's no solutions. You ever get into an argument with somebody, you're really pissed off. 5 minutes later, you walk away, you're like, I should have said that. Those solutions aren't going to come to you when you're really pissed off or you're a victim, right? So people are in that stage. And when you're in that stage, you just don't feel like doing anything. You don't feel like going out to see those properties. You don't feel like going out to do a property tour or calling a broker or underwriting a deal. For me, I've been fortunate because I've had Jake through this whole process. That's my accountability partner. I've got my podcast every week. Those are my accountability partners. I've got my students. We've done 7 events this year, in-person events, because we've gotten on the planes. I have a fiduciary responsibility. If students want to come, great. If they don't, I understand. If you want to wear a mask, whatever makes you comfortable, we're going to those events. We're going to social distance, and we're going to do that. And that was my accountability piece. I was held accountable to that. I have a big group of employees that we need to be held accountable to. We need to get better. We need to over communicate during these times. So when you're working from that catabolic energy, from anger or the victim, there's no solutions. Once you start surrounding yourself with other people, once you start looking for those solutions, you raise that level of energy. The possibilities are endless. It's like, I never thought of that. I never thought of that. I never looked at it that way. And I've been able to, like I said, to leverage my wife, who's amazing, to leverage Jake, to be surrounded by those people and actually to get me through this. And like you said, you have a restaurant, you've been doing something for 5 or 6 or 8 or 20 years, and you're just used to doing it that way. If you're rigid and you're not able to be flexible and to be able to look at something differently, it's a blind spot. And, Ray Dalio talks about it, ego and blind spots. I mean, I've been doing this for 20 years and I'm going to continue to do it that way. Well, COVID may not allow you to do that. And if you're going to continue to do that, you're not going to succeed. You're not going to get through this time period, because it will revert back. You're going to get back on stage, Walter. It's going to happen again. May take a little bit longer. I can't wait, bro. I hate these Zoom meetings and all that. It's just like, dude, there's no energy unless you're really super talented and you can be engaging. That's still hard because everyone's home in their underwear. They're looking at their phone. They're not paying attention to you.
Yep.
There's no energy. But when you get into a room, but what did you do? You pivoted. You figured it out. You're still delivering value. And when it comes back, who are they going to be looking at? They're going to be looking at you and Jake and Gino, because we've been delivering the value all throughout these times. And they're like, those guys put out when it was crappy. They got me through it. I'm going to go stick with them.
I love that you're that dedicated to this, where you're still doing the events, at least with your small community, making sure that
Yes.
the personal community is still getting access to you, and
Mm-hmm.
you're still out there pushing, and you're really creating a lot of forward movement. In
Mm-hmm.
the book, The Science of Getting Rich, he talks about being the advancing man, the advancing person, who is
Mm-hmm.
advancing everybody that you come into contact with, and you have that energy and that drive that's pushing you out there, advancing the people around you. What do you see for yourself as far as what is your goal? Like our goal of 100 millionaires after talking to you seems like a small goal. What is it that drives you as far as being able to leave this impact, like being able to improve people's lives? What is your focus each year? And I'm sure it changes and it grows, but what is it you're looking at in 2021?
That's a great, that's a great question. I don't have any more like ultimate goals. I've done pretty much what I wanted to do. Our students to date have closed 12,000 units. We've got about 40 students, I say, that have left their W-2 jobs. I want to track that because that's a measure of success, right? If you can't measure it, then you can't manage it, right? So that's important to me. I want my students to do by 20,000 units by the end of this year. And I'm not talking about just syndicating 100 units. I'm talking about like 20 units here. I'm actually real closings and real deals. For me, that's important. No unit count, I don't care. I always tell Jake, let's do a couple hundred units, really great. I want to do great deals. I don't want to do marginal deals. I just want to, because we have the property management company, so we can't really scale up. Me, ultimately, I think people with financial intelligence can change the world for the better. I think if we get people financially intelligent and they know the difference between good debt and bad debt, they know the difference between what a good skill is, what they need to learn. That's important to me. So, I created the Youth Academy with Jake and Gino because I want our members to teach their kids. Because it's hard when you're in your 30s and you've never really taught money. You never taught banking. You don't know what inflation is. You don't know how to start that conversation with your young kids. Where do you start? Right. So that's pretty much what I'm really passionate about for 2021, to start this message of being able to talk to your kids about whether they want to start a job. Is college right for them? Is, how to save money? Where should you save money? What does the stock market look like? What does the banking industry look like? How are they making money? All of these questions are really important to start talking to our young, because right now, with inflation, with printing money right now, people are focused on, I've got to save money. Well, is that the best thing to do right now? You're saving money and you listen to Dave Ramsey and pay off your debt. Well, really, I mean, you're borrowing money today. 5 years from now, that money's worth a lot less. So you're paying back money a lot less. That's worth a lot less. So stop and think about this. But if we don't know and we're not taught that, it's going to be hard. So I think for us, continue to do deals, continue with the community, and just help people along with their financial intelligence, financial education.
So many awesome points there. We've identified the same thing, and we've never syndicated before. We've always just bought, whatever deals made sense. I think it
Mm-hmm.
was 25 units, 24 units last year, 26 units this year. It's just
It's awesome.
one big swing. If we can do one big swing a year,
Mm-hmm.
I'm happy with that. I don't want to do a lot of purchases, just
Yep.
really good deals that work for me and my business partner.
Mm-hmm.
And the other piece that you mentioned was this youth academy. So this
Mm-hmm.
is obviously youth is important. Well, we don't want to quote Hitler too often, but he said, "Give me the children, and I will have the generation. Give me the
Mm-hmm.
children, I'll have the nation."
Mm-hmm.
And you're talking about a positive impact, a financial impact on an entire generation. You're going
Mm-hmm.
for the youth. I think Gary Vee does the same thing, where he goes after the youth. His message is maybe a little dirtier. He's not as clean and trim with
That's
his
him.
direction,
Yes.
but
Yes. Yeah, and I think that's important. I'm just going for their parents also, because a lot of the parents don't know the nuances. I mean, people don't know what fractionalized banking is. They're like, well, how do banks make money? I mean, you give them a dollar, they lend you nine, and they're making four times their money on it. Well, I didn't know that. So maybe you'll think about your strategy. Maybe you'll become the banker, right? So that's important to teach parents, because then ultimately parents will teach their kids. And if we can have kids who are smart, who can delay gratification, and who don't rack up this student debt, and maybe go to community college for 2 years and go for a major that actually makes sense, that's important to lay that foundation.
I like it. I actually have a student. Well, I don't know if she's a student, just a friend of mine, but she's in our coaching program, and she has 3 subways, a lot of units, and she's got a 19
Awesome.
year old son, a 17-year-old son, and he joined our coaching program. So I'm sitting with him the other day, and he's telling me about how his mom gave him a loan to go and flip motorbikes, and charged him interest every single week, so he has an understanding of interest.
That's
And
right.
but that's because he had a parent who's a multimillionaire and is giving that back. So
Yep.
you're actually reaching out to people whose parents don't have that,
Yep.
that.
And I'll give you the example, even with my family. My son is in, was, I got him into a deal 2 years ago. He only put 5 grand in the deal, but that's all the money he had. And he owned 1% of the deal with us. And it's funny, right after that, when you have skin in the game, all of a sudden the word owner draws start coming out. Dad, do we have any owner draws this month? Dad, how many vacancies are there? What's the economic occupancy, Dad? When are we going to refi and roll this thing, Dad? Oh, we just sold 18 units. I got 4 grand back, Dad. Wow. It's so the conversation completely changes once you involve them. And you have to be age appropriate. Obviously, he was 16 years old at the time. He'd already been watching lessons and been part of the community. And you know what? Funny thing is, all of a sudden we got bought a deal like 6 months after that. He's, Dad, can I owner finance it? Can I borrow money from you? All of a sudden, owner financing comes. And I'm like, dude, you're not diluting me, bro. I mean, you got to come in with that. Maybe not this one, maybe the next one. But all of a sudden now he becomes creative. And like those words, Kiyosaki says it, your vocabulary really talks about how intelligent you are. And he didn't know what owner financing was. He didn't know what draws were, economic occupancy, unit turns, all that came about by him investing in the deal and being part of it. So, include your kids as much as you want, but you know what? Make them pay, because then all of a sudden they'll be cognizant of it.
So I like that. You brought him into the deal. He's learning the words. It's all about practice, hands-on, like going out and
Mm-hmm.
doing it.
Mm-hmm.
At what point do children, because you mentioned children are a long-term investment. They cost a lot of money. There's a
Yep.
lot of time and energy. At what point does that turn the table? Is it 16 when you can start bringing them into deals, or
It's a
uh,
good question. I mean, every child is different, and I think what happens is the old mantra is the kid's got to save. So the whole saving thing is such a joke to me. When you're 5 years old and you're taking kids' money away, I'm going to put it in the bank for you. That's like punishing them. When they get older, you give them money, they want to spend it before, because they think the saving thing. So every child is different. Having the conversation, my 6-year-old runs around the house now and says Jake and Gino, and funny, she knows what an asset is, but she'll call her siblings ass et. So she's using it as a joke, right? And she knows the word liability. She knows all these words, and she's 6 years old. So just introduce them to the words, introduce them to what you're doing. Cash, debt. You talk about mortgage, you talk about loans, you start using these words. And as they get older, my 15-year-old loves going on Zillow. She's going to be residential. She's going to be a residential agent. I know by the time she's 18, we're going to start flipping houses together and doing that. So introducing them at a younger age and letting them speak to you about it. I think the cash flow game by Kiyosaki is freaking amazing, because they start doing a balance sheet and income statement, and they start figuring that out, and they start figuring out what a doodad is, and they start figuring out what an asset is, what a liability is, and they start putting those pieces together. And then they're like, you know what? Should I buy that amp for $1,500, or should I invest the 5 grand with my dad? They have options. You're not there as a parent to tell them what to do ultimately when they're 18 years old. You're trying to instill that idea into them when they're younger, so they can start making those decisions as they get older. We're not here here to tell them all the time what to do. As parents, we don't want them to fail, but sometimes they need to make decisions on their own, and then you can help them out with that decision once they made it. My son was 15. I didn't let him buy that amp. I said, Mike, just hold on. You're $1,500. When you invest in this deal, you will be able to make money from that deal. He didn't understand at that age. So I made that decision for him. Now that he's 18, his decision, I ain't making any investing decisions for him. We bought a deal 3 months ago. He didn't even think about it. He invested that money into the deal because we sold part of that property. He pulled the money out and rolled it into the next property, right? But to give them that foundation when they're younger, sometimes you need to tell them and guide them when they're younger. But as they get older, you won't have to tell them because you've already taught them the right way when they're younger. Does that make sense?
Yeah, no, it's powerful because you're putting it's just like any kind of business. You're setting up all the back end.
Yep.
And then when an opportunity actually does occur, you're prepared. They're prepared
Yep.
there's just a small little, okay, we've got to learn these things real quick, but you have the foundational
Mm-hmm.
pieces, the language,
Mm-hmm.
the words, the understanding is already back there, even if they may never think they're going to be an investor, but at some point it does come up.
Mm-hmm.
For moving forward with your children and other people's children, what would you say is the biggest piece of advice? Not just putting the words into their heads, but being able to really instill a desire to make money. Because you hinted at, if you take their money and you put it into the bank account, right, and you just take it away and put it in the bank account, what would you say you should do with that money? Like, what do you think is the easiest way for them to learn?
So the first thing you need to do as a parent, this is the most important thing. Do what you say and say what you do. If you're telling your kids that credit card debt is bad and to delay gratification, but you're out there and you have 50 grand in credit card debt, you're buying stuff that you don't need. Well, guess what? They're going to look at that and go, well, that's full of crap. I'm doing that also. It's like when you go to a doctor for nutrition and they weigh 300 pounds and they're telling you how to get healthy. You're going to listen to that doctor. It's the same thing. So be congruent with your message. You live the message. And sometimes we make mistakes, and I think as parents we have to understand that it's okay. We all make mistakes, and our kids need to know that we make mistakes, because when they make mistakes, it's nothing wrong with it, because dad made that mistake, I made a mistake. Whoa, I bought the cryptocurrency and I didn't sell it, or I made a bad investment, or I didn't save my money, or I made a stupid purchase. It's all right. We need to teach them.
Get that
uh-huh.
Bitcoin.
Uh-huh. That's what I'm saying, bro. And that's the thing. I think we need to be able to say to our kids, it's okay. We've made that mistake before, but I'm trying my best, and this is what we need to do. And for me, just continuing personal development. I want my children to continue to read, continue to educate themselves. I want them to really like school. We homeschool, and I don't want them to hate school. I want them, when they graduate college, to continue that education and continue to personally develop. That's really important. One other thing with kids, we talk about skills that they need to learn. I think a skill that every child needs to learn is to be on time. Be on time wherever you go and respect other people's time. Really, really important. So,
Those are good advice, good tips. You hit on homeschooling twice. So,
mhm.
little known fact, I was actually homeschooled my entire life. And
Mm.
so people thought I might, turn out strange or not social. And it turns out they had a very profound effect. And it was, I just don't run with the crowd. What are you seeing the benefit is with your children, homeschooling them? And I don't think that everybody should do this. I want to be very clear that I think it's only
100%.
for caring parents who really put their children's education first and believe that they can do it. If you're just sending your kid at home and giving them a book, I don't know that that works. So
So
Gino,
for me, 20 years ago, we were the weird family. I've got 6 kids. 4 of my kids were born at home. So they're born at home. So my wife did home births, right? And to me, I thought that was crazy, but she didn't. She wanted to go natural. She wanted very educated. She knew her body. She's really healthy. So she's really proactive. Just like I said, the big why, don't want to rely on anybody. She loved the experience. Same thing with homeschooling. When we started out, it wasn't as popular. It was still, rather, but nothing like it is now. Now, fast forward to today, people homeschooling, they can't go to the hospital. They're all having kids at home. You know what I'm saying? It comes full circle. So for homeschooling, uh, you don't need to spend hours and hours a day doing it. We do between 2 to 3 hours a day. I mean, they're at gymnastics right now. They play tennis twice a week. They go to dance. So from the social aspect of it, it's really more for the family, where they have a great relationship amongst themselves. And then they have friends outside of it. And then obviously the parents need to be caring. But as they get into 6th, 7th, and 8th grade, as long as they can do their reading and writing and arithmetic, they start teaching themselves by the time they get into high school. And for us, it's a lifestyle. I can go on vacation whenever I want. I can take the month of December off. I can go into June and do school, and I can teach them to their strengths. You know, one of my kids is really athletic. One of my kids is really artistic. One of my kids is an amazing reader. So we can focus on what they want to learn and not make it a chore. And for us, it's great because we're all together. I'm going to get off the podcast, go have lunch together with everybody. So it's a lifestyle choice for us. So not for everybody, but Walter, I can honestly say that any parent out there who's dedicated, just like multifamily, anybody can do it. I mean, don't make the excuse that I'm not smart enough. You taught your kids how to walk, talk, go to the bathroom, and do their ABCs. You can teach them how to read, write, and do arithmetic. I will guarantee you 100% because my wife is not a teacher. She's just a regular person like me. So it's really focusing on it and really being caring, like you said, and really being dedicated to it.
I think it's really important right now. In the past, when talking about homeschooling, it would be, either the parent trying to convince people to do it or the child saying, hey, don't do it.
Yes.
But right now, people don't have a choice. They don't have a
Hmm.
choice but to educate their children. And so being able to go out there and give tips like you just did, where, you got to be caring, you got to be loving, you've got to make the time, you got to really see it as, 2-3 hours of quality, 2-3 hours of really making sure that you know what they're doing and have an understanding that, and really it's their future, right? If you can
Hmm.
teach them how to walk, you can teach them how to do math, you can teach them how to do science. My mom, who taught me, she didn't finish high school. She was, she
Hmm.
dropped out of 10th grade. But me and my brother both had 4.0s in college, and we both own multi-million-dollar businesses as
Hmm.
adults. So it
Hmm.
doesn't necessarily matter how much you know or whether you were educated or college, a professor. It's, can you pay attention to your children for a short period of time and learn about what they're doing and care enough about them and their future so that they can go do it in a manner that will actually impact and be better than it was in school. We don't want parents having that experience where their children
Hmm.
feel like they missed out because of COVID. We want them to feel like they had an advantage over the rest of the world because of COVID, because their parents took
You know
that
what's
time.
crazy about it? What crazy about it is that most dedicated parents will do homework with their kids. So when kids come home, they spend an hour and a half with homework. They drive their kids to the bus stop. So if you take all that time into effect, you could be schooling them 2 to 3 hours a day. And I think the other thing I'd like to leave everybody with is don't ever compare yourself with someone else. We all do that when we homeschool. This person's smarter than me. You're not in competition with anyone else. You're in competition with yourself. God gives you certain gifts. You have to exploit those gifts and work with what you have. And that's one thing I always learned as growing up. Well, they're doing better. Why are they working so, their kids are so smart. Don't worry about what they're doing. Worry about what you can do with your family. And ultimately, seriously, 3 hours a day of work, focus, is more than enough when you're homeschooling. More than enough, 3 hours a day.
Such powerful advice. You've been so valuable. You've given so much value here in this call. A lot of delivery of really powerful, impactful pieces. Thank you so much for your time, Gino. I know you got to jump off. You got to go have lunch with the family. Before we do, what is a way that somebody can reach out to you if they want to learn more about one of your coaching programs, any of the products you're putting out there, if they want to invest with you guys, or just see your podcast? What is the easiest way somebody could go and find out about you? And then on iTunes, what's the name of the podcast? How do people get access to it? And definitely, if you're listening to this, go and write a review. It helps tremendously making sure that more people are getting access to
Yes.
this good content. So Gino, what is your best contact information?
So just go to jakeandgino.com. We have our blogs there. We have articles there. If you want to email me at gino@jakeandgino.com, I'll send you a PDF copy of the Honeybee. So you can start figuring out multiple streams of revenue, figuring out how you can start creating more streams, but complementary streams. So gino@jakeandgino.com. And iTunes is the Jake and Gino channel, whether it's Wheelbarrow Profits, Movers and Shakers. We have 4 shows a week that we launch. So it's been a lot of fun. It really has. So anybody has any questions, just email me.
Awesome. Thank you so much, Gino. If actually, before we jump off, 30 seconds or less, 3 pieces of advice. If you go back to 20-year-old Gino, or the
Hmm.
advice you give to your 20-year-old children, what are those 3 pieces that'll move them forward in the most powerful manner?
I don't know. Let me say one piece. Don't work for the money. Work for a skill. I would say when you're 20 years old, if you can learn how to sell and really same side sell, that is one of the, entrepreneurs need that skill. I think learn how to sell and then maybe marketing is different, but sales, it's all there. And like I think Gary Vee says it, right? Be poor in your 20s, but really reinvest in yourself. Don't worry about that income that you're not making. Because when you're younger, it's all about building skills. It's all about trying to add value to other people and try to learn as much as you can. And as you get older, the money will show up.
I love that. So powerful. Gino, from Jake and Gino, you heard it here. This is Walter Morel from Alchemist Nation. It has been a pleasure hanging out with you. I hope that you found value. If you did, go to waltermorel.com, write a review. Go to iTunes, go to Alchemist Nation podcast on iTunes, write a review for us, write a review for Jake and Gino. Mitch Jorsky, you sat very quietly listening to all the value of Gino. There's a reason for that.
Dynamite. I mean, you've known me long enough to know that I never am quiet for that long. That's a new record. Gino just put in a new record. I've never been that quiet ever because I was just taking it in. And honestly, the quick takeaway is that all the stuff he was talking about, I mean, there's so many bullet points I could touch on, but in the end, everything he's talking about and doing is similar to what we're doing, is similar to what Bigger Pockets is doing. Like success is kind of a blueprint. All you got to do, work hard, do the things that are, the others are doing. I mean, it's not, especially real estate, it's not rocket science. Gino mentioned read, write, arithmetic, right? With the homeschooling. That's all you need to be successful in real estate.
That's all you need is right. Yeah.
And that's another beauty about it. So, I mean, anyone that listens to this, go back and listen to it again, because Gino gave you the blueprint and he gave examples and the wherewithal that him and Jake had. I mean, 18 months until they got their first deal. How many people are going to put in 18 months? Most people 6 months in, I can't find the deal. I'm done. I'm not a real estate investor. 18 months. You know what I mean? That's just one of many beautiful gems that were dropped in the last hour. It was awesome.
Guys,
Mitch, why don't you sign us off?
I want to thank you for having me on, guys. I appreciate it.
Thank you so much for being here, Gino. Galter, thanks for letting me be part of it. This is fun. So for everyone out there, this was the Alchemist Nation podcast. And Galter, I can't even talk. Galter Altamiro, I can't even get your name right now. I'm so excited. I've never had this happen before. I've been so excited. Anyway, you sign us off.
Organize and collect when you have a choice. Always work with the best. Cheers to your success. Thank you, Gino. You are an alchemist. We appreciate you, my friend.
My pleasure, guys.
Enjoy the rest of your day, buddy.
Thanks so much.
Ciao.
Cheers.